Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of February the 20th, 2017. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. Now, what we can assess here with the dollar index, we've got a bit of a mixed signal here, but not an overly strong one. We've got our medium term crossing over our long term. Predicted difference to the downside. We have new trend line support has formed here at or about the 101.80 area. Now, we have pretty strong demand still coming off the 99.50 level, but the key vantage point 18-day predicted moving average at 100.64. We're closing at 100.95. Still supporting dollar longs, but it's not a strong trend here in my respectful opinion at all. We've got a lot of things that are happening that are causing fluctuations in the dollar, political unrest, etc. So the dollar is holding firm, but for next week, right now, we can see that our neural index is pointing higher. Our predicted RSI at 55.5, so it's still moderately bullish, but there isn't a lot of momentum here. So with this corrective move, I would say that basically the dollar should hold firm. But remember, we've got a holiday short week here. We have President's Day in the U.S., Canada Day, or in Canada, excuse me. We have Family Day, I believe it is. So the North American session on Monday is going to be very, very slow. Now, as we come into our main Forex pairs here, starting with Euro-US, the Euro made a nice recovery here just off the 105.15 area. That's the area that we want to watch next week, that we've confirmed that trend line going back to the first part of January 13, connecting the dots here. Now, the problem that I'm seeing currently with the euro is we're not able to break above and close above this key vantage point 18-day predicted moving average at 106.50. We again sold off at the end of the week to 106.13 after what appears to be a corrective move higher on Thursday, only to sell off again on Friday. Now, with my own direct clients, I warned them of this. Thursday is a reversal day, guys. That's what it is. So the dollar is actually, you can see the euro has been going down for the better part of last week, but on Wednesday and Thursday it pauses. Thursday we have a little bit of a spike up in euro demand, but then it turns around on Friday and gives it right back. So our indicators here, once again, guys, we want to watch some of our key indicators. Our medium term crossing over our long term predicted difference. You can see this pink line crossing over the blue line to the upside with our neural indexes pointing higher. Now, the predicted RSI very mixed this week on the euro pair. We can see that it's broken back down. We have a failure here off of the 50 line on the predicted RSI. 35.5 suggests that we're still seeing downward pressure on the euro currency, at least against the US dollar. So watch for that to likely to continue to some degree next week. But what we really want to watch here, guys, is can we break back up above and stay up and close above this critical vantage point 18-day predicted EMA at 106.50. If we get back up above 106.50 early in the week and we start breaking above 107, then longs will clearly be in play. The reverse side of that is, of course, the US Swiss franc. We've got a significant failure again at the 101 level. We're moving lower. Now, the US Swiss franc, it will follow the US dollar, the DXY. Basically, it's 100% correlated here, guys. So that's what we have to watch out for. Once again, we can see that medium-term predicted difference crossing over the long-term to the downside. That is a problem. Again, but the predicted RSI, excuse me, here, bouncing off the 40 level. We finished the week at 58.5, suggesting we're still bullish. So as long as the equity markets are going higher and the dollar index is going higher, then so will US Swiss franc. Now, as we come into our British pound for next week, our indicators from VantagePoint are definitely rolling over to the short side, but we've had multiple failures down at this level above 103, just above the 103 levels. So unless we get a sustained break of 123 here, guys, this trend line down at around 124, and then again this fractal area support that we've got sitting at about 123, that area is probably going to hold. But the VantagePoint triple EMA cross is saying we're going lower. There is no conflict in the predicted short, medium, and long-term differences, or the neural index, the predicted MACD crossing the trigger, and the predicted RSI at 37.5. So this is the key area that I want you guys watching next week. 124.73. As long as we hold below this area, shorts are absolutely favored. But if we can clear 124.73, that will take the pressure off the downside and suggest that this trend line that I've drawn in is going to hold, and we are likely to return back to the 127 area. Now, as we look at dollar yen next week, we're into a pretty tight channel here, guys. Very, very tight channel, actually. This is the area to watch for right here. We've got what could potentially be a quadruple bottom coming off the 111.50 area, so watch this area very closely. The top of this current range comes in at or about the 115 area. You can see that this is our supply area up here where the sellers move in, but the buyers, they've been moving in down here at 111.50, so keep an eye on this. Right now, our VantagePoint indicators, our predicted differences, our neural index, our strength indicator, all pointing down. The predicted RSI, though, is not showing momentum. We're looking for a break of this all-important 40 level for this to really get moving. That is not happening yet, guys. So this coming week, we do have that triple EMA cross, 113.46. We've closed at 112.77. This is the area we watch Monday, Tuesday, and Wednesday to see if we can break back up above this to trigger further dollar yen longs. But right now, clearly, this is in a bearish consolidation period, and it is very likely that we are going to break down back below this area. But if we can break through 111.50 right here, guys, get your sell orders in right away. It's okay to buy down around 111.50, but keep your stops tight. And if we break through this area down into this area that I've talked about here, a break of 111.50, we short it right away. Very easy trade here, guys. Most people will not buy the top and they will not sell the bottom, but that is the play here, guys. So remember that. Watch those areas very closely. And again, those VantagePoint indicators are suggesting we're going lower. Now, with USCAD, this one is just very, very tricky as of late. You can see that we have been banging up against this trend line that I've drawn in here, connected the dots. We've had multiple retracements along this line right around 131.20. We're looking for a break here, guys, of 131.24. If we can get that, we buy up high. If we cannot get through this, we are likely coming back down into the 129.70 area. Now, if we break through 129.75, we short it right away, okay? But right now, these indicators from VantagePoint, you can see that there is no downside momentum on the leading indicator, the predicted RSI, and we are rising up off of that. We've now retaken the 50 level on the predicted RSI. The predicted MACD is still below the 0 line, but it has crossed the trigger to the upside during this period of consolidation. But guys, to sum it up, we have to break through this trend line resistance that I've drawn in here. You can see we're knocking up against the door here multiple times, but only a sustained break of that trend line and the key VantagePoint 18-day predicted moving average at 131.13. We have to break above that, close above it for a day or two, and then we're going to run higher. What is it going to take for that to happen, guys? Oil has to sell off again. Oil is trapped in a relatively tight range between $50 and $55 a barrel. A break of 55 to the upside, U.S. Canada plummets, but a break on oil to the downside, and U.S. Canada will retake the 133 area very, very quickly. So keep that in mind. But right now, we have a lot of activity on this particular currency pair between 131.20 and the VantagePoint level at 131.13. Now, coming into our two final commodity currencies, Aussie US, guys, obviously is getting ready to make a much bigger move here, but we have to break through and close above this critical 77 level. We've come up, tried to break through it 2 days in a row, and then we've snuck back in. But right now, the key VantagePoint 8-day predicted moving average at 76.56, you can see that we've retested this 1, 2, 3, 4, 5, 6, 7, 8, about 8 times. That is not at all a coincidence here, guys. So we're holding above that key VantagePoint 18-day, but we can't even breach the 8-day, and we've paused on it again yet on Friday. So as long as we hold here, the easy way to look at this trade for next week, guys, we're looking for a break of the current range. The current range is identified between 77.30 and 76.13. A break on either side of that will lead to a trending move. We don't have that yet. Our indicators here from VantagePoint, very mixed on the predicted differences. Predicted MACD pretty much flat. Predicted RSI still above 50, but you can see we're getting very choppy up here. So once again, we could see another corrective move down to 76.17, but if gold continues to move higher, Aussie US will absolutely follow it. The exact same thing here with New Zealand US. Now, if gold does continue to advance, New Zealand US longs could be a very good trade here. You can see we've got solid trend line support coming in at about 71.40. So if we can hold this trend line, the New Zealand US will recover to the upside, but it's going to take gold prices moving higher. We can see right here the needle in the haystack, the medium-term predicted difference crossing over the long-term predicted difference to the upside. But the predicted RSI is still not giving us a green light to buy this. But watch this area very closely around 71.50, 71.40. If we break this, we are probably coming down into this 70, maybe even the 69 level. But if it holds, we are going to return back to the 74 level. Now, the only real event risk here, and the key vantage point level here for next week to watch, 72.08. So as long as we're below 72.08, shorts carry the edge indisputably. But if we can get above 72.08, then we advance higher. Now, what I was saying is that for next week, the only real major event risk here is the FOMC minutes. Now, I think they're going to be somewhat dollar positive here, as long as there's no surprises in that. So keep a very close eye on I believe it's on Wednesday, we get the FOMC minutes around 2 o'clock, I believe, Eastern Standard Time. Keep an eye on that. That's the major event risk for the dollar. If it remains hawkish, then the dollar is going to strengthen. But if there's any dovish commentary in there, then the dollar will come under pressure midweek.